Alrighty. Good morning, good afternoon, and good evening. It's Doc from North America. It is TGIM. Yeah, thank goodness it is Monday. Monday. All right, there you got, what do we got there this morning? We're looking at the dollar index. You can see it's down a little bit, nothing major. Looking, relatively firm. There's not much that's on the beta. We go over to the main platform, and you'll see same situation, just down a little bit, but still in a buy, in a weekly buy. Just being strong the way it can be strong. This was an interesting run. Right here from that 102 area, went into the daily buy, climbed into the weekly buy right around in here, and it just kept on pushing all the way to this point. It was interesting. I think they really thought, no more than a couple weeks ago, they really did think that, June, come on, let's lower the rates. Money for everybody, cheaper than it is today. It was all this hard drive, push to lower the rates, make it easier for people to spend, or no, I'm sorry, borrow, not spend, but borrow more money. And it's a big difference between spending money and borrowing money. And so at this point, one has a double whammy on it when you have to borrow it and then spend it compared to just spending money you already have. That's an ouch. And then so you can see here when they finally, it's like, no, 3 times no. And we have a Fed chairman that constantly sings that song too. No, yes. In his head, he's got this transitory thing going on. He just has an idea in his head that all this is transitory. In other words, it will be here for now and it will go away sometime in the future. And in this case, he has interest rates are transitory. He believes that interest rates will go down, and it could be soon, and or this year. That's what he keeps on saying to people, and known professionals that have been accurate, not known professionals who are spinmeisters that never seem to get it right. So in other words, there's a difference between a professional who is on all the communication networks, ABC, NBC, CBS, CNN, MSNBC, Bloomberg, CNBC, Reuters, and they keep on singing the same songs year in and year out, and when you look at their historic statements, they're wrong. But they're always on, but they're wrong. And then you have the few who are really professional, and they're bullish sometimes and bearish sometimes, but it has nothing to do with the political power of who's in the White House. So here we are. Mr. Powell has this transitory, inflation is transitory, interest rates are transitory, the markets are transitory, everything's transitory, and it makes no sense. So he's telling us right now at this moment in time that they're going to lower 3 times this year. And there's, I don't know if there's any Fed governors or Fed bank presidents at this point who agree with him. That's the amazing part. But he keeps on saying it. And so it confuses the market. It makes things, makes them all go sideways to nowhere. Just the odd stuff. Oh, here you go. April New York Fed Manufacturing Survey, minus 14.3. Let's see what that has to say. March retail sales year over year, 0.4% up. So interest rates are rising, and prices are rising. Let's take a quick look at, say, an intraday trade of the intraday trading of, where's it at? Right there. That news just came out. Let's see if it had any real effect on any of these markets. Say, let's look at the euro. Whoops. Didn't make the euro that bullish, did it? The news came out and they smacked the doodled it no more than 1 minute and 15 seconds ago. That's what it is. right there. There's a smack-a-doodle to me. Let's take a look at, I think they rallied the stock market though. So let's go take a look at that. Yes, they did. Let's widen that out. So they're buying over the last, where did it start? It is right there. The news came out, where's that? Right, the news came out right here, and they're taking it up. So stock markets, oh, they're heading for it. Look at that. They're heading for that support resistance area that we talk about a lot. I think you can see it on the screen there. Can you see that right there? Yeah, you can. See, yep, I see it right there. You can see. There it is right there. I guess it's going to bounce back up and hit that thing. Okay, cool. Back to that 12 to 15 area. So the euro didn't like the news. I'll just show you the euro. Again, right there. It didn't like that news. But the S&P 500 liked the news. Means they can spend more money, I guess. Let's see what the dollar index did. Dollar index turned a little bit and started pushing back up. Let's see if we can find the spot there where it happened. I guess it's right there at 7:25 and 32 seconds. And that is at 7:35 and 37 seconds. So that was 5 minutes after. Yeah, I guess so. 5 minutes after. And it's been lifting it up. And then let's see what metals look like. Let's see how that affected the metals. Where's gold? Right there at the top. And the answer to that is, there's 833. Okay, so right there, there's gold. That was 8:28 Eastern Standard Time. That one there is 8:30 and 43 seconds. So within the first minute of the news, gold went from, where did it go from? Let's say it went from the 370 area to the 375 area, just up $2, and now it's back down again. And so that's the numbers that just came out, and we can take a look at the last of them, unless someone else doesn't like the idea that we're looking at the markets in a precise, clear, coherent way. And then we can take a look at the bond. Where's the bond? There's the bond, and let's widen it out more. See if we can get a feel for where that was there. You can see it perfectly with the line right there. It says 7:30. The news came out. And when a bond price goes down, interest rates are rising. And so they knocked it. The vigilantes are so clean. Look how clean that is. They knock it down. Bang. In how many seconds did they do that? They took the market down from, there's 7:30. Even, how about that? 7:30. And no seconds, okay? Right there, smack. And there is 7:30 and 26 seconds. And it's been sitting, took 26 seconds to do that. And did they know? Boy, do they know what to do. Right there, look at that, it's just flatlined. You know, in other words, they're like, okay, you know, more expensive, you know, interest rates rising more, you know, the whole bit. You know, do they think that they're going to, are they on the same path as Mr. Powell is for the Federal Reserve? I don't think so. I think it's the other story around the corner. To them, it's not transitory. It's confidence. You see the interest rates the way they are right there. That's a 30-year Treasury bond. The most easiest tool for the Fed to control. The rest of the markets they can't control at all, but when it comes to the government bonds, they can do a pretty good job. Look at that. They're trying to build a second leg to a new low right there. That's a little surprising. It's like a big A, B, and C down. You can see our algorithm went into a minus here off of that close right there. And so now, yeah, let's see how they bang around in there. Let's go take a look at the S&P 500 again for the fun of it. This is fun. They actually see reality. The facts that are going on live, right? Oh, look at that. They got up to the 1150 area. Just missed the 12 by half. 2 ticks. 2 ticks. And then our math rolled over again. Huh. Transitory. That's what it comes down to now. The Fed is transitory in its ideas. In other words, what they think today could be not tomorrow. It's short term. That's the title of the. I think that's going to be the title today of the webinar. The Fed is transitory, intraday and daily. I like that. That is good. Transitory. All right. Have we beaten up on the Fed enough? Do you think have I described my opinion of the market through actual real numbers? We've just shown you these are not fake numbers. This is real stuff. So, just glad to have the fun. I mean, it's always fun. That's why I do this. That's the cool thing. Now let's go over to where I can put my title. I'm going to put my title on that because I think it's a great. Every time, the Fed is transitory in its ideas. I think that's the. I don't think I've used that title before. Let's see. Remove that. Remind me later. Come on. There we go. Yep. The Fed is transitory on its ideas. Let's see. Right there. There we go. How about that? Oh, look at this thing climbing again. They got the Dow Jones Industrial Average up 300 points. Wow. Dow up 303 points. Nice. The Fed is transitory every day. Indeed. That's what it comes down to. There it is. All right. Now, where did we leave off? Oh, there's the stock market. It's still trying to lift up, but we'll see if it rolls over. I think they're going to go play with that area there. Bang, bang, bang. Let's go down to the euro. Might as well just look at the euro at this point. That's the Swiss. Let's take a look at the other currencies. There is the Swiss. I'm sorry, that's the euro. It's coming up a little bit there. Let's look at the daily. Right there. Kind of, when it comes to the daily, it's almost like no move at all. It's like no move. It was up high. That's what it was, and it came down. We're at 4 days now on a sell right there. Let's see what else we can say about that. We're 4 weeks in a weekly sell. Let's move that zero line down to there. There it is. We emphasize the zero line. I don't have to have a zero line. I can remove it like that. There's the zero line right there. And so right there. And that's where we are with the euro. The euro doesn't really have much desire. You can see it went down to our 0.382 area. Got very close. Let's see if we can make that a little bit clearer. See right there? Yes, Friday it drove itself down to that area. Today it didn't. They haven't made new lows, and you can see how our algorithm is trying to spike a little bit and turn up. When it does that, you can see it here, or any of these things where they start to spike and try to turn up. You can see after a few days they find a way to get going. In this case here, it couldn't, and it was in a buy no less. That short-term read. Now there's an interesting spike right there. You can see that one. It did try to turn up. A lot of times it does. And this one, it took 3 days to get it to turn up. Let's see, where's that? That would be the second. That was like even more. That was the second day right there. And then there, 4 days, 5 days before they put. But what was nice is that when it finally turned, it gave us a buy signal right there. Where's that buy signal? Whatever. There you go. There's the buy signal. Right. Not much, it was interesting. We went into a weekly buy here. they drove it up into that 111 area. It was nice. The retreat or the consolidation brought us down into the 107. This time it stalled out at the 110, so got these lower highs. And then we hadn't, right there was interesting. We were starting to triangle. We were starting to think, oh, this is interesting. Maybe this will be all the, it'll be a flag like a lot of the things we're seeing go into flags. And then, boy, they really are not interested, are they? They've done the same thing. Matter of fact, when you see this and then you go over and look at the 30-year bond, I'll show you the 30-year bond. They have that same characteristic. The euro is definitely following the 30-year bond. There's Janos, good morning. How do you like that transitory thing, huh? And I put the title out already. The Fed is transitory every day. That's what it is. Mr. Powell's like the only one that wants to lower rates at this point. Nobody else in the Fed really has that much desire to do anything, but some are talking about raising rates. And we got a Fed chairman talking about lowering rates. Talk about crazy goes crazy. Yeah, see, we saw this. It's broken this triangle too. This is the 30-year bond. And you can see we're down into good lows here today again. Yano says, U.S. retail sales data strengthens the U.S. dollar. The Bureau of Labor Statistics has published the United States monthly retail sales. Data shows how demand, retail level, the publication strength, U.S. dollar value. Higher retail sales indicate that the consumer continued to buy despite rising prices. The data signals that retailers can and will continue to increase prices. Inflation will continue to grow. That's right. That's why you see the bonds going totally the opposite direction to the stocks. Rising inflation would force the Fed to keep interest rates high for longer or even hike rates. Exactly. This in turn is strengthening the U.S. dollar. Yeah, it really is. But I don't think we're going to blow through the 107, so I'm not worried about that. I was a little surprised we're getting past the 105, 5.5 area. The retail sales month over month reading was expected to show an increase of 0.4. Release data shows a surge of 0.7. Ouch. Boy, that's an ouch, isn't it, Giannis? Core retail sales that exclude auto sales was forecast to increase by 0.5. It jumped 1.1. Oh, wow. Giannis, there's a lot of good data there, isn't there? Moreover, the prior month's data has been revised upwards. Ouch, that's not good. Retail sales grew at 0.9 instead of 0.6 in February. Core retail sales expanded 0.6 instead of 3. These revisions move the growth. Yeah, they do. Combined with last week's higher than expected inflation data, the retail sales signal there will be no rate cuts during 24. Moreover, rate hikes could be done to stop price surges. Copy and paste. I like that. So why is the market going up together with the dollar? Trumpy. It's the Trump effect. We for us in this region of the United States, in the Philadelphia region, we refer to it as the Rizzo effect. We had a mayor in Philadelphia. His name was Frank Rizzo, and nobody wanted to admit that they would vote for him. And every time he ran, he won by like 70-80%. It was crazy. And when they polled at every election he was in, he would show that he's probably going to lose. And then he would win all the time, like big numbers. So they know that in 6 months plus, right? All of April, all of May, all of June, all of July, all of August, that's 5 months. All of September is 6 months. All of October is 7 months. They know that in less than 7 months that the Trumpy is going to win, and then the economy is going to go back to 1.5 or 1.4 inflation. Knowing Trump will probably drive it down to like 1.0 inflation for a while. Probably go even down lower and drive the socialists in this country out of their minds. Someone just put a post up on a financial website that said that prices will never go down. So get used to it. It's like listening to Mr. Obama back when he used to say, "This is the new norm." This is the new norm. Oh God. Oh my God. So why? And so what's happening is the stock market says, okay, Trump's going to win even bigger now because they can't see if they lowered rates, they could probably fool a couple people to want to vote for Biden. But the fact that it makes it really hard for them to you know, lower rates, it's really making it a major challenge. And so, Mr. Biden needs that. There are young people. They're polling young people, 18 to 24. They're going to vote for, a majority of them are going to vote for Trump now. As far as they can remember the Trump years. They were 14 years old, 15 years old. They were mowing lawns. They had money in their pocket. They were able to, buy pot cheaper. Everything. They know the difference. Everything is expensive now. Everywhere you turn, something is more expensive, and it's hard to get a hold of. I saw a number this morning. Discs. Let me see if I can find it. There was a look at of the expense of price of things, and one of the big jumps was computer discs. Like record stuff, that type of thing. The blank disc. Yeah, here it is. I found it. Where U.S. inflation hits the hardest. Video discs and other media is up 30.1%. Just 30, basically 30%. Juice and drinks are up 27.5%. They walk into a McDonald's, they're paying $1.27 instead of $1. Or if it's a $3 item, now they're paying almost $4. Motor vehicle insurance up 22%. Repair on the house and items 18%. Electricity, let's see, house care, individuals and elderly. Now, electricity is up 29% in America over the last 3 years. They know that. As far as they're concerned, they don't really care if they keep on claiming he's going to forgive loans. He doesn't have the power to forgive loans. And so the media keeps on talking like your next door neighbor got his loan forgiven, maybe you'll get it too, when in fact nobody's gotten their loans forgiven. So that's why they're looking. Markets like to look. They always say markets like to look 3 to 6 months down the road, or further, sometimes 9 months. So in other words, money managers start to look. Remember when you asked me what will happen the next 6 months in the market back about 4 or 5 months ago? And I chose 4 products to look at, and my number one product was, remember what it was, Janos? You remember what that number one product I told you, stock, about 5-6 months ago was going to be the play? Do you remember that? It was like a $9 stock. U.S. Steel. Remember that? U.S. Steel. Do you remember that? I gave you 4 stocks to look at, and U.S. Steel was number one. It was an $8 stock. Put what most in tips? You were asking about stocks at the time. You couldn't have wrote it down because you asked me to look at stocks. If I would have my choice looking down the road, I would easily, if I'm not experienced in the market, I would easily buy tips. They're the best things to do. But you asked for 4 stocks. We have a video of it. It was U.S. Steel. It was my first choice. That could be a different episode. Right, exactly. For the amateur, tips are the best product. It is. Tips are the best product. No, that was $8 a share when you asked me. Yeah, well, that makes sense. That's, 7 months ago, right? 6 months ago? It was at the end of the summer, in August or September. I said, go look at U.S. Steel. It was my number one choice. And then I forget who the other 3 were. One was like an oil company or something probably. In autumn, I asked update just before December. Oh no, this was like while back. When we can take a look at Let me go take a look at a. I can give you the date because it was 2 days after the jump in the stock. In other words, that I gave it 2 days before the jump in the stock, so we can go back and look at that video. Let's see. Let's find the stock and steel. I think it's still X. U.S. Steel. U.S. Steel. think it's X. Let's try X. U.S. Steel X. Okay. So now let's go back 1 year. And let's see, where was it? That was March of 20, March. 1 year. 1 year. There we are. Okay, there it is. Perfect right there. Is it? It wasn't $20. It was in the teens. So it was even further back than that. So I think it was, look at the videos in, wow, it's all the way back in 220 at this point. Because the stock was around $10 and the next day it jumped to 14. So look on November, no, I'm sorry, look at November 2016. That stock was in, it's 2 years ago? Wow, that's wild. That is wild. And then, let's see, where's, oh, there's one. Look at the video on, I guess it's August 7th. Look at August 7th. So look at August 6th, 5th, or 4th in there. Because that was when you asked me about stocks for 6 months. That's what that was. So look at the videos on August the, I'm not sure what the, if that's a Friday or what, but go, the stock jumped from 20 to 24 or something like that from the day before or something like that. The next day it was $30 a share. Went up like $8 or $9. So look in the first couple days of August. Was it Shell? How was Shell doing? When was that? Was that Shell back then too? So what is that? What is Shell's symbol? So we'll look at that. That I don't think exploded. That did not explode in August of 23. How is Shell? Let's see. US Steel was a summer and autumn. I asked update just before December. Then it was about tips. Oh yeah, well definitely tips without a doubt. Magnificent Seven and oil and food. Okay. So what now? That's right. Yano says it right. It's not what you've done then. It's what have you done lately. And that's when it comes always down to, in the financial markets, that's why Doc is here. It's what have you done lately. In other words, what did you do last week or 2 weeks ago? That's exactly what it comes down. Let's pretend I have a 4 or 5K in money market account. I want to buy stock instead of let it all erode into inflation. What would you suggest? By the way, oil stocks are still hot. Well, I was telling somebody they want to buy, I forget what they wanted to buy on Friday. Someone was talking to me Thursday or Friday. And I told them to start dollar cost averaging into, like, now oil stocks, you got to imagine when Trump gets in, oil's going to go down in price. So you kind of want to, when you get closer and closer, I would assume there's going to be pressure on the oil stocks. We're going to start to feel the pressure on that because after Trump is in office, oil prices should come down. They'll make more money though. That's a good thing. The companies will make more money, but oil prices itself will come down. Because of taxes and so forth, it'll make it easier for them to make money and sell large inventory. They'll be producing enormous amounts, but oil stocks are coming to the twilight at this point, at the end of it all. Now, let's see. Let's go take a look at it. Industrial will be a good thing to do, because there's going to be a lot of growth. I would imagine, car sales, some of the car manufacturers that are actually functional probably will be things to be into. And it'd probably if you want to start now, you dollar cost average into it. So in other words, you have $5,000. I'll have to put together a sector group again. I'm trying to think what else is out there because everything is relatively inflated, but they're looking forward. So the only ones that I worry about right now, possibly metal stocks. They're not going to be something you want to be in anymore. So oil and metal stocks will be definitely something you don't want to be in. On one ticker, I have to figure out the tickers of which ones are good to do. So I have to figure out which motor company, like maybe Ford. Ford might be a really good one because they're the least influenced by government supports. So whereas General Motors is having its problems. Probably some of the foreign ones that manufacture. I understand that the number one manufacturing of German automobiles is here in the United States, so it might be one of the German car companies. 5 or 10 tickers could be the case. Yeah. Oh, it's possible. Yeah, I could see 4, 5, or 6 sectors. I would think some of the pharmacy types will have problems. In other words, like a Bristol Myers Squibb and so forth may start to feel some problems to it. I would think. The biotechs are always going to be like the Magnificent Seven. They're always going to be a possibility. One day they have something that's very, very profitable, but they're very speculative and they're very always overpriced. Do they have a bad return? The Germans are too much influenced by Norwegian wealth fund. Ah, okay. The dollar is heading back again? You mean it's going up or down? Let's go take a look at the dollar. I'm going to go into the intraday to see it. There's look at the euro. The euro's back up now. Yeah, that would make sense that it's heading down. And then where's the dollar index? Right there. It should be down. Well, wait a minute. Yeah. No. What in the hell's going on there? So the dollar index, well, remember, it's a slower product, the dollar index, compared to watching the euro. Like, that's like 5 minutes, I mean, it takes 5 minutes for it to do 23 ticks. So it's not exactly the best product. It's heading down now. But more than anything else is look at that euro. Let's take a look at the cable. Now, the cable seems to be flatlined, but it's also climbing. Let's see. Let's put that in there. Let's change the format of the instrument and put. Let's see. Okay, there we are. Okay, there we are. And so, yeah, you can see that. There is the cable doing the same thing. It fell on the news, and now they're climbing up. Wonder what the bonds are doing. See if the bond vigilantes care. More than likely not. Where are the bonds? Right there. Yeah, there's some firmness there. They're definitely, they haven't come up to the 115 yet, but they're getting there. And remember, you always have to remember, with the Fed has a trading desk in many cities. They have a trading desk in New York, and they have a trading desk in St. Louis, and they have a trading desk down in Atlanta. Remember, there's nobody that stops them from doing whatever they want to do. You can't even audit them. That's the worst part. You can't even audit them. So, it could be the Fed in there buying. I mean, the stock market's a cheap play. You can buy that easily, and you can buy, the currencies. Currencies, they influence the currencies on a short term with no problem. They come in and buying. There's nobody big enough to sell against them. The only ones that can give them any pressure is the bonds. Notice the bonds are not flying over this spot right here. They're still down below it. So they're in there buying the bond futures contracts. And, that's it. No problem there. So, that's and am I saying that the Fed interferes in daily markets? Of course, every day they do. They document it. They actually put it in their minutes. How much money they're giving to Citadel, and telling them, good, you can keep it for the day, as long as you're long. Why do I sense that there will be selling of stocks, buying of dollar during the U.S. cash session? It happens. It's a thin market. I mean, our volume, I try to explain that to people, how, currencies only have 50% of the volume we used to have. And, stocks at the New York Stock Exchange only have a third of the volume they used to have. The NASDAQ has gained from that. They have picked up about 30 or 40% in volume recently over the last, say 4 or 5 years now. They have definitely picked up the volume from it. but they've also grabbed volume from everywhere else. The Philadelphia Stock Exchange is included into that. The Cincinnati Stock Exchange is included into that. When you look at the Nasdaq, the Nasdaq is the number one exchange now, trading platform, I guess you could call it, EMS, or what do they call it? They have a exchange. They have initials for them all now. One initial describing them. But when it really comes down to it, is that the markets overall are very thin, and you see it. You see it every day. And you know what? They didn't go down that much. I mean, the 500-point drop on Friday is a 1.25%. We went through this last week. We talked about it. A crash is 7%. A crash is not 1%. It's not 0.5%. It's not even 2%. Some will consider that it's a major sell-off, but not a crash, if it's 3%. But a crash is 7%. That's what is a crash. And when they say the markets are crashing and they're down 0.75 percentage point, that's just hyperbole. In other words, it's just false interpretation of the market action. So in other words, it's nothing for us to be up or down 0.5 percentage point a day. That should be normal. Right now, the Dow's up 0.8%. It's up $315. Now it's up $319. It's 83%. Up 0.83. Not even one full percentage point. And so a market explosion on the upside is 7%. A market crash is 7%. And that's what confuses everybody. You have fake media out there spinning this stuff constantly. So I will work on finding, as I said to you the last time you asked about 5 or 10 tickers. I will work over the next day on looking at out. But I would say my first two choices right off is long a car company and long, what was the other one? Not a pharmaceutical. I had something else. What was the other one? Let me write these down. Car company. And I'll answer that over the next day or two. Let's see. 5 tickers. Or did you say 10? 5 to 10 tickers, I think you said? 5 to 10 tickers could be the case. Okay. 5 to 10. 10 to 5. Tickers. Cars. I had another one in there. What was the other one? Because I'd imagine gas stations will be good, but not the oil companies per se. So I would lean in that direction. Let me put that down too. Gas stations. People who are actually selling the stuff, not the manufacturers of it. Because you got to figure our inventory will go up enormous. Not our inventory. Our buying will go up because it'll go down in price. So it'll have greater volume. Rhetorical question. Why is there no circuit breaker for a surge? There is a circuit breaker for a surge. It's 7%. It's 7%. And then the next one is 13%. And then the next one is 20%. There's circuit breakers on both sides. Yeah. Yeah. All right, I'll look them up. What was the other one I said? Because the car company was second. Probably manufacturing in house products. Like what do they call white goods? Like refrigerators, washing machines, dryers, freezers. They call them white goods because they're usually white. And that will be an area to look into. I thought they have circuit breakers on both sides, on the down and up, 7% on each side, and then the next stop is 13%, and the following one is 20%. Right. Correct. Yep. And I thought there were circuit breakers on the upside too. They try to calm the markets down. No upside? Huh. Interesting. Interesting. I guess, let me say this about that. When you look at brokerage houses, like Goldman Sachs or, JP Morgan, Chase, or Bank of America, or Merrill Lynch at Bank of America. Bank of America owns Merrill Lynch. Wells Fargo. When you look at a lot of these, they own the old A.G. Edwards, Wells Fargo, and J.P. Morgan owns the Bear Stearns, and so in other words, the brokerage houses have consolidated. What was my train of thought there? They don't put out recommendations of sells. You rarely ever hear a recommendation of a sell. They only put out recommendations of buys. So in other words, for every 10 stocks they're telling you to buy, they may tell you one to sell. But I think the number is even higher. It's something like 90 to, out of 100, there's like 93% buys and something like 7% sells or holds. Or something like that. Right around there. They rarely ever tell you to sell anything. They always tell you to buy something. They never tell you to. In other words, it's not 50-50. Here's the 50 best stocks to buy and here are the 50 best stocks to short. They don't do that. They don't give out that type of recommendation. But I could have sworn they used to have a stop on the upside. They have halts on upsides because I've seen them do halts on upsides. Sometimes they have halts on. They have a halt on an upside also. Maybe they don't fit into the circuit breaker system, but they do have halts. They call them halts. Holding something. Halt. Stop. Just, don't move. That type of thing. So. All right. Let's see. Where do we go from here? Let's go take a look at. We saw the cable. And you see the bonds. You can see the bonds there. They're going back down to this. Let me just put this line in here. I'm going to put this in like this. They're heading back down to there. Make that yellow. That's the 30-year bond. The bond vigilantes are like laughing at the buyers of bonds. They're selling it to them. And then when you go and look at the S&P 500, oh, look at it. They keep on banging against our resistance line right there. They hit it again and dropped. So, market surge. Then after the market breaks, they resume moving. Yeah, exactly. Have a cigar and a cognac. Yeah, that's what we used to say. Buy low, sell high, get stoned. Exactly. Yeah, exactly. Then after the smoke breaks, they resume moving higher. Sounds reasonable. Yeah, exactly. Well, like I said, the Fed is the buyer of last resort now. In other words, it's not the money managers. It's not this exchange specialists. It's not the fund managers. It's the Federal Reserve. They do it all. And if you don't do what they like, they don't give you free money. And if you do what they like, don't matter how much money you have, they'll give you more free money. That's right, free money overnight. Imagine getting $1 billion for free to use overnight. It's like you can squeeze something out of it. Let's see. Let's go back to the currencies. So from there, let's go take a look at Swiss. There's Swiss. Swiss is not really doing anything. Like the last 4 days, it's basically been parked in that 91.30ish area. It goes up and down a little bit. It's been a daily buy for a while, for 6 days now. And since late January, we've been in the weekly buy. Yeah. Cognac. Break out the cognac. Oh, no, this is what we used to say. Buy low, Sell high, get high. That's it. That's it. Yeah. Okay. There's the what happened to the poor yen? They're still doing it. I don't see any retribution going on. Supposedly the Bank of Japan was going to do something pretty aggressive if it got through that area. So I'm not sure. I don't see anything going on. We've been in that weekly buy since underneath here. The resistance was the 52 announced by the Bank of Japan, and you're not getting any. This is the fourth day now up above the 152. We've been in a buy for 7 days now, and for the last 4 days it's been through the 152, and we've been in a weekly buy since the middle of April, since the mid 151 in this area. So, all right, and then from there we go over to the Great Experiment, which is almost dead. Look at that. It's like doing nothing. 4 days in a sell. The weekly did dive down. The fast algorithm is underneath, but the slow ones that we follow with this product are still above, and they're not giving up. It's like 32 weeks now in a weekly buy. When we get up into the 40s, we're going to start saying, are we going for another full year in a weekly buy? When I saw that dip on Friday last week, I thought, ooh, maybe we're going to top it out. But look at that. They're starting to bend up again. And it's like, what? Are we going to, if that fast algorithm goes north and we break, the slow one goes through the manifold here, the top of the manifold, this one right here, this is a non-linear time manifold of ours. It's one of our inventions there. If it gets back up through that, ooh, we might see a whole year in a weekly buy. Anything that could be really possible too. All right, from there we go over to the South African Rand. There's the Rand. That's been interesting. The last 4 days it's been moving up, and gold has been moving up. They're not working together whatsoever. And we went into the weekly buy. Let's steal a weekly buy from somewhere. There must be a weekly buy in here somewhere. There's one. Let's steal that weekly buy and move it over. Right there. And so it went into the weekly buy right there last week. And when it comes to gold, let's save this. Save workspace. Bingo, bango, bongo. And then when we go over to the metals complex, let's go take a look at the metals complex now that we're looking at the South African Rand. There is gold. And gold is up for the day. You know, they did sell it down on Friday. We are 4 days in a sell. That's curious. Let's go back to the South African Rand for a second there. Right there. You see, for 4 days it's been going up. And for 4 days in the gold market, it's been going sideways up. So went into the sell right here. Didn't make a new low. Has not made a new low. And we're in a weekly buy. So most experienced traders around here that follow our webinar know you can't take the short. You can only flatten out. And it's been all right. You know, it went back down to there again. Now it's showing a little more strength here, but we're not seeing any real lift out of this. It is choked right now. Right there, it's choked into a consolidation. It's trying to take off, but not happening. And you can see we even had that wild spike there, and then they still drove it down by the end of the day. That's like what Janos is saying. Once the cash market gets going in the United States, what will they do to the metals complex? Will they punch it harder down again? Oh, yeah, that's the other thing, too. I would imagine that as things get moving along with Trump, the metal stocks, you know, the gold stocks will be a little tough, too. Yep. So. Where are we at from there? That's the four. Oh, we haven't done silver. Let's see how silver looks. There's silver. And you can see silver doing that same thing as gold is, you know, but it's a little bit firmer today. But it did touch on Friday that $30 area almost, $29.90, $29.90, 10 cents off. And it's been in that weekly buy always since the 22 area, and now it's made it all the way up to the 30 area. So that's pretty good. That's it's almost a 30. It's heading for, if it gets going one more time through that area, we're looking at over a 33% gain. That's pretty damn good. Woof, woof. You know, I mean, it's even more than that. When you're at 22 and you go to 30, that's That's an increase of a 30% increase would have been 27. So you're talking it's over 30%. It's almost in the 40s now. So that's pretty aggressive. 41%. So from there we go over to copper. Copper's got that same sloppy thing going on. It's 3 days in a sell. It firmed up really big today and it's trying to back off of it. It's been in that weekly buy from the 375, 380 area. So getting up to 435? Or was that 440? That is 439.65, basically 440. So that's been a pretty interesting move from 380ish or 379ish to 40. That's over 60 cents. So that's pretty good. That's 27% move. It's not bad at all. All right, and then let's take a look at the one product I don't understand how anybody could short, and that is the platinum. Platinum has finally gotten through the $1,000 area, but it's not very pretty. It doesn't really have much strength. So at this point, the only answer to it all is that this thing, I don't know how they can get sellers to sell this stuff. I have no idea. So that's why we say it's only the central bank at this point controlling this stuff, the Federal Reserve, because there is no way anybody with money would put that much money at risk. When you know that gold is trading at 2,400 basically, and you're trading platinum at 979. Nah, that's excuse me, sorry about that. That's like suicide when it comes to a money manager trying to short something like that when historically the product is traded over. How do you explain to your investors that you're shorting something that normally trades at this point in time at maybe $3,000 a share and it's trading at $979 a share? That is big risk. And who would do that more than anybody else? The Federal Reserve, because it's not their money, it's our money. So they're pissing it away. All right, from there we go over to the energy sector. Crude oil. You see, crude's been in the sell for 3, 4, 5 days now. They did have a spike on Friday, but it didn't survive. And you can see it's been in a weekly buy since the 76 area, so it went to 86. So that's a good 12% move on the upside. Let's put it up on the beta platform, and then we can take a look at. There's the beta platform, and you can see it is doing the same exact things, and it's in a sell for 4 days, going on 5 now, and you can see it's still in the weekly, same way as we are in there, in a weekly buy and a daily sell. It's telling us that being neutral, don't get trapped in this surge. Let's take a look at right there. I heard some traders in Europe this morning in European time. It was up around 4:30 mine time, which is basically like 11:30 European time, right around that area. And they were saying that the North Sea oil trades heavy. In other words, it doesn't look like it wants to take off. And you can see it's been in that weekly buy for a long while, but its dailies are having problems, and you can see the sideways action. And on Friday, you can see Friday, they jacked it up to something. Let's fix that again. I want to show you. So on Friday, right there, you see they traded it. They took out the high there back of April 5th. They took that high out. That's 2 weeks ago. But by the end of the day, they were up for the day, but they were towards the lows of the trading day itself. Now today they've pushed into the below, and it's under 90 again, and it keeps on doing a lot of that selling stuff there. So it is trading heavy. I agree. It is definitely trading heavy. And then from there we go over to Nat Gas. There's Nat Gas. Where is Nat Gas? I thought I saw it. Nat Gas. High grade. There it is. Nat Gas. Nat Gas because of the amount of oil being pumped, I was told that the natural gas is really cheap right now because they're playing the gas, the crude market, and the crude market brings up natural gas and they sell it, so it's pushing it down in the 170 area. And you can see mainly in a weekly sell, it's flirting going into a weekly buy last Friday. We'll know tomorrow if it did. And then from there, more than likely it did. And then from there we go over to the energy stock. We saw it was up around 21 out of Spain. There it is right there. It's in a buy for 4 days. And you can see it was over 21 last week on Friday. And it was today too, but now it's below and it's trying to break down a little bit. And the weekly, we'll see tomorrow, but more than likely it did climb into a weekly buy. So, all right, traders, that is that. We have the title. It's already been sent over to the Dukascopy chat line. And we will catch you all tomorrow, same time, same channel. And I can't wait to see how this day plays out. This should be very entertaining. So, happy trails to you until we meet again. That'll be tomorrow, Tuesday. Happy trails to you, to all our trading friends. Yep, Janos, catch you later. Catch you later, Robin. Ta-ta for now.